Okay, hello everybody, and welcome to Investing with IBD, sponsored by MarketSmith. Today is November 24th, 2020. I'm your host, Arusha Paris, and we have Scott St. Clair returning back to the show. And as a reminder, this is the week of Thanksgiving. And so not only do we have Scott St. Clair, and is he a favorite of Mark Smith, but he's also everyone's favorite turkey. Thanks for being here, Scott.
Thanks. It's always fun.
On today's podcast, we are going to talk about the current markets, how stocks always surprise Scott, and then we will end the episode with a few current ideas. So let's get into the current market. The current market is in a confirmed uptrend. We have 3 distribution days on the NASDAQ, 2 on the S&P 500. Scott, what are your thoughts on this market?
So the market's very quiet. I like when it's trades in these really tight ranges. It's my favorite time of year because the market always makes it so tough for me. So I like when the market's really quiet because then I can just kind of focus on the stocks. And I really believe that if unless the market's really bad, those best companies out there are, they're doing their thing, and those stocks can go up in a sideways market or, obviously in an uptrend market. So it's pretty quiet. We're trying to come out of that little area, but it wouldn't bother me a bit if we just kind of stayed in this kind of quiet sideways range.
Yeah, I mean, it is pretty remarkable. And I just pulled up the MarketSmith charts. And so you can always watch the video version of the podcast on investors.com/podcast. But we're looking at the MarketSmith chart here of the NASDAQ, and it's pretty remarkable. I mean, you had in early September that pretty brutal sell-off. And we came in pretty hard. We almost came right back up to new highs and then sold off a little bit more methodically this time. But our stocks were starting to get a little bit more hammered. Tried to go into new highs, and then we had that vicious 2-day sell-off when the vaccine news was released, and it really hit a lot of the cloud stocks, or a lot of these growth stocks that have been doing really well for a while. And after that, though, last couple of weeks, it's really quieted down. And it's almost a perfect kind of action because you're seeing the market just slowly tightening up, almost kind of coiling. And maybe we're setting ourselves for higher. But I agree with you, Scott. The sideways action, the quiet action is pretty good. Explain that a little bit more, though, to people. Why do you like this when the overall markets are more quiet?
So if you have a stop loss plan like we do, and if you're putting on size like we tend to do, then you need to have a stop loss plan. So it's easier to get shaken out, at least I find, when there's a lot of volatility in the market. So if the stocks are moving around, it's great when they move up a lot, but it's also bad if they move down a lot and you have, some type of plan to reduce on weakness, which I tend to do. And so you can get chopped up a lot in a really choppy market. So uptrends are great. Obviously, that's the best one, but sideways is not a problem if as long as, I think, like I said, unless the market's really bad, the best companies just kind of want to go up. As a general rule, I find.
Yeah.
You can go back and study, even the 70s, which is, a long period where the market did nothing. There were a lot of stocks that went up 200, 300, 400% in that environment. So they're out there as long as, unless you get into a really a bear market, then, all bets are off. The market, the best stocks can't avoid, an S&P down 30, 40%, something like that. It's just, there's nothing they can do about that.
Yeah,
So,
and also, keep in mind, I mean, just remember the amazing run we've had since April. The fact that we are taking a couple of months off is actually, for the longer term, sets ourselves. It's very constructive and sets ourselves up to resume the larger part of the uptrend.
yeah, I agree. And there's a lot of focus on the market. I try not to focus too much on it. It's not that it's not important. It's very important, right? It's the M and Ken Slim. It's that for me, I found market's always fooling me, So you can see you've got that sharp break of the 50-day. Oh, we're in trouble. It comes back. And then you get another sharp break of the 50-day. Oh, the market's in trouble. And then it comes back. So I try to focus on, I for me, it's the other way around. What do I own? What are the stocks that I own? How are they? Are they trying to resist the market? The stocks I wished I owned, the leaders, are they trying to resist the market? And then, the overall market as well. I that's kind of the order. For me, it's kind of a 1A, B, C approach, because the markets have been tough for me. They tend to try to fool me. If you try to watch them too close, I think you'll get fooled. A lot of people, they'll email us or call, was yesterday a distribution day, or was, and I just think, well, the market wasn't really down that much. Don't try to read too much into it. Really look for the larger signals that you'll get, and you'll do fine.
Yeah, it is funny that you mentioned that, Scott, because I want to say like 15 years ago or so, there was, and this is just my experience, but it seemed like there was more tie-in with the markets, the way the markets trended, distribution days, and then if the environment eventually affecting stocks. And so I would focus a lot more on the markets, how many distribution days. Once we get up to 5 or 6, be very careful. These days, yeah, I almost get most of my information on the health of the market just from the individual stocks. That a lot of times with the distribution days, I'm not always up to date on the counts until I check the next day, like in the market pulse of the big picture. But yeah, I agree with you. I don't follow the larger markets too close, because in the end you're buying and selling stocks, and I feel like that's in many ways a more pure way to pull you in the market. When you start seeing more and more setups starting to form, more breakouts, stocks coming back up through the 50-day moving average, that's, to me these days, telling that there's more reason to get exposure to the market. And then you start seeing that, and you start getting feedback like, hey, I'm starting to make money on some of these stocks, or some of these stocks aren't blowing up in my face. So that will continue to give me confidence, and I've seen more stocks, then I slowly pulls me in more and more. Uh, and the same way, the other way, if my stocks start getting hammered, they start pushing me out. So I feel like that has served me better over the last 10 years. It just feels like, ever since 2008, things have changed a little bit. And the markets don't give as great, or the larger market analysis, very, very important still, but doesn't give as useful information as it used to give, I think.
Agreed. Agreed 100%. I've sold a lot of great stocks in my career because, the market was doing something. I was worried about the market, and then 3 or 4 days later, the market was done going down, or it didn't even have to go up. It could just be done going down, and that stock that I sold was a lot higher, was higher. That happens a lot. And so I've kind of decided, look, if it's really bad, if it's, like in early this year, the market broke really bad, the best stocks, they broke as well. So you're going to see it in the stocks that you're in, and in the leadership as well. So it's not like you're going to miss the signal by not, watching the markets on a granular level.
Let's go over to the S&P 500 very quickly here. And now, the initial kind of, after the vaccine news came out, it seemed like there was a definite rotation going from NASDAQ, more tech-related, cloud-related stocks, towards more of the traditional companies. As the vaccine gets out there, more and more of kind of the traditional companies should have a chance to start doing better as the economy opens up. And now it seems S&P 500 seems like continues to be the stronger index now, just in the short term, I think, versus the NASDAQ. But I don't know about you, Scott, but I'm not sure about that, if that rotation is necessarily just happening yet, or it just may be taking more time. And so that's sometimes what happens. It just takes time for larger funds to get out of stocks and move into other types of stocks.
Yeah.
What are your thoughts about a potential rotation, or
Yeah, it's hard for me. I had a friend who bought Exxon, and he made like 30% in it. It's like, wow, Exxon, that's amazing, but it's not something that I would do. And
Right.
and it just, was just doing nothing for a long time. So how did you know it wasn't going to continue to do nothing? So, but when Exxon goes from, 32 to 42, it's going to move the indexes, or Carnival Cruises or Hilton Hotels.
Mhm.
So they're just not the kind of names that we'll normally navigate in. Now, if they're real, if this is real, there'll be time, chances to own some different types of names, So the Zooms and the Pelotons have gotten hit, and so they're either going to build a new base and set up again, or if the rotation is real, there'll be some new names. In fact, one of the names I'll talk about later is just different. It's not, it's not a tech related name, so to speak. That's come up on my radar. So if that rotation is real, that stock should do well, and people will start to see that in the charts, which is such huge advantage if you have kind of a blank slate of opinions. You just let the market come to you, and you put in the work. And every weekend, you're just putting in the work, looking at as many charts as you can find, because you never know when that's going to switch. And so all of a sudden, oh wow, I've never seen this stock XYZ. It's starting to set up. It's building a base, and so you'll be ready for that rotation, rather than, you don't have to predict it. You don't. The great trades don't require predictions, is a Cole Moshe a quote. So there's my first quote of the day. But it's so true. You don't have to predict them. You just have to kind of see it and take action. And so that, if it's real, they'll start showing up in our screens and our reports.
Yeah, and you mentioned routine. I think that's an important part that we never get to touch on too much in the podcast. We'll talk about more about in MarkSmith webinars and things like that.
Yeah.
But talk a little bit about that, about just having a consistent routine. You alluded to it a little bit about the importance of it, but what is like a typical routine, or a more general routine that you use every week? Uh, are you looking at stocks every day? Do you keep more? What do you do on the weekends? Things like that.
Yeah, so I'm a big weekend guy because I have a day job. So I think if you're a truck driver, a school teacher, a lawyer, a doctor, or a MarketSmith product coach, during the day I have responsibilities. So I mostly, during the day when the market's open, I'm doing my job, or I'm watching the stocks that I'm in, looking for unusual price action, either both good or bad, and just kind of managing that. And then I'm doing all of my new research, all of my fishing is done on the weekends. And there's a couple of reasons for that. I prefer the weekends, and this is kind of how, the traditional way we were taught when I would go to the IBD seminars, is they always talked about the weekends, the weekends. Well, one, you didn't get the books that they used to send you till the weekend. So as soon as you
That's
got that
interesting.
book, it was like Christmas. You couldn't wait to go through that thing. So you just kind of got in the routine of doing it on a weekend. It would come on Saturday morning via courier. So it was like I couldn't wait to do that. So you had to do your work on the weekends. But you also have the full week of the market. So you get a full weekly bar. And so, you want to use weekly charts initially, so that you want to let that weekly bar finish. And I like Wednesday after, I'm sorry, Wednesday, Sunday afternoon, because I think it's Sunday at 2 o'clock Pacific time. The market's been basically closed for 2 days. So it allows me to kind of decompress and not worry so much about the market. I'm not so influenced by the market. If I do my work today, I'll be bullish. If I do my work tomorrow and the market had a bad day, I could be, negative on the market. I could have had a bad day in the market, and so it'd be hard for me to think, about buying new stocks. So I prefer the weekends, and I just do a lot of work on the weekends, and then I don't do, that much, fishing or looking for ideas Monday through Friday. I just let the ideas come to me that I found on the weekend.
Yeah, I've found that that's the most effective way, and that was really kind of a breakthrough for myself, was doing most of the work on the weekend. Come up with the ideas, set the alerts.
That's right.
That way you don't have to, because a lot of times it's just so hard after, yeah, when you're working somewhere else, or even when you're working here, it's hard to when on your free time now to go through more charts
Hmm.
and find ideas and do that kind of consistent routine during the weekdays. So yeah, for me, I've definitely found it. I usually do it more on Saturdays. Saturday morning, I try to knock it out of the way. Sundays, especially during NFL season, is
Yeah.
NFL, and it's impossible usually for me to get anything done with all the games going on. But so yeah, it's what you said earlier about doesn't matter what environment you're in, you have to do your routine because it's amazing. And this is another perfect year. 2017 was like this, but this is definitely one of those years. These markets are recovering much faster
Hmm.
than they used to, or especially for those who have gone through from 2000 to 2015, where when the market stopped working, they were done for a good 3 months or so. They'd just be chopping everyone up if you played too much. Here, it seems like after a couple of weeks, we're up and going again. So that's requiring all of us, I think, to adapt a little bit more. But you don't want to assume that they're going to recover though, too.
But
But
what
you
is it?
have to be on your toes and you have to be ready.
Yeah, one thing you said on IBD Live that I love it is because for for someone who's been in the game a long time, for me, bear markets used to last a few months, and so you
Yeah,
could kind of just not look, and just kind of be
it's
out of
true.
the play. In
Yeah,
2000 top to 2003 roughly was just a nothing period. There just wasn't hardly anything going on. That's a long time. So,
yeah,
but you all, I think it's maybe I'm getting the days wrong, but you always say you're always 4 days away from a
that's
potential
right.
rally, right? No matter
Yeah,
what.
yep,
And I love that because I have to keep that in mind that no matter how negative I might get, we're always 4 days away from potential rally. And this year was perfect, like you said, that no way in a million years would I have believed, you know, beforehand that the move off the lows like it did and would have led to a really great, fantastic rally. And so that's the reason why you can't think that. You just have to kind of go with it and be prepared. And
yeah.
the
And I didn't
weekends,
make that phrase up.
oh,
I
I'm
heard
sure.
it from someone else
Yeah, join
years
the
ago.
club.
At someone doing an IBD. I can't remember who was doing it, but someone said it one time, and I was like, well, I never thought about it that way.
Yeah.
But still, it was just hard for me to shift my mindset. But even like what a couple of weeks ago, when was the vaccine news? So that was like 2.5 weeks ago or so. I got hammered. I really got hit hard on that week, as many others did. And so I was, because that was the second time I've gotten hit that hard. Since one was in September, and then this was even worse. So I was pretty convinced that we were going to be down and out for a while. I was like, "Mate, we might be done for the rest of the year,
Yeah.
if it got really bad." And well, I mean, it's not even 10 days later. And I was looking at all these charts. I'm like, oh my God, there are so many things setting up right now again, and there are a number of things working.
Yeah. Yeah, it's a good mindset to have. You're always 4 days away, so that way it keeps you on your toes and preparing. And a weekend is more than enough. You don't. A lot of people will say, "Well, I don't have the time," right? And they're right. Nobody has the time unless you're a professional trader or you're an RIA or do this for a living to
Right.
do this every day.
Yep.
Nobody does. So they give up because if I can't do it every day, they feel like they're missing something. So I've stopped that. My philosophy is if I can't find it on the weekends, then I probably don't want to worry about it finding it on a Tuesday. And if it's really, really good, I'll find it the next weekend. So yeah, just once a week, and then sprinkle in a few little bit here and there, and you're good. You're prepared, and you'll get a great feel for the market too by doing
Yeah,
that.
and I'll end on one thing before we take a break here. The Especially in the beginning, it was always very, very hard for me to do it, right? Because it is work and looking at charts, especially when you're learning the stuff. It's hard to go through a lot of stocks. After a few cycles, once you start putting it together, and once you get a little bit better at this, I mean, you never really get great at it, I don't think, but you just want to hang around long enough to participate in markets that are just going to be a lot more rewarding and forgiving of dumb things you do. But uh, it, it becomes more fun though. Yeah, once once you hang around long enough and you find yourself in a 2020 where these markets are so much more trending, uh, I just find myself, it's a lot easier to look at stocks all the time these days, because you have enough experience and enough feedback that it's worth doing, I
Yeah.
think. So I
Uh-huh.
find it a lot of fun learning about new companies, figuring these things out, because I know that it's, and you talk about this all the time, the treasure hunt,
Yeah.
right? It's these days it's not a problem for me to do it, versus 15 years ago it was a problem.
Yeah, I stole that from David Ryan, right, from Market Wizards, right? Because I'm 100% convinced in our database, in one of these reports, there's more than one stock that's going to double, triple, quadruple, right? And so when you think about it like that, I don't know what it is. I don't know how I'm going to handle it. I'm probably going to mishandle it, but maybe I can handle, half of it, catch a portion of it. And so you every time you think about that, what's that new name? And if you have success catching a really big name one time, then Scott O would say a lot, you're hooked, right? You're
Yeah, it's
hooked.
true.
Because once
It's
you've
true.
done it once, then it's like, I want to do that again. If
Right.
you buy a stock
Right.
at 20 and ride it to 60, I want to do that again, and
Yeah.
so you're always out there looking for them. You're very persistent, to a fault sometimes, because
Yeah.
when you shouldn't be playing, you're always in there. At least for me, I want to do that again.
So yeah, that's perfect. So the market is back in an uptrend. Growth stocks are hanging in there, but remember, make sure you're doing that routine on the weekend. Keep that watch list fresh, because the next bull market's always 4 days away. Let's take a quick break, but when we return, we are going to talk about why stocks always surprise Scott. We'll be back.
I am here with Scott St. Clair. Scott's one of our senior product coaches at MarketSmith. Now, Scott, there are a ton of publicly traded stocks just on the U.S. I think it's over 5,000 stocks. Who has the time to go through all of these stocks and find the very best ones?
Yeah, most people don't, right? So what you need is a tool like MarketSmith. We have decades of research on what makes a great winning stock. So we've done all the research for you. So we're going to try to highlight those specific stocks with those great data points. So if you're looking for that next great potential big winner, orange stock ideas button, you just click on it and you've got some of the main reports that we use, including the Growth 250.
Yeah, and the Growth 250 is the first list that I go through on the weekends.
Yeah, it's the most popular one, but there are others. There's the Breaking Out Today, stocks near a pivot, and then the Blue Dot list, right, which is very popular. It's going to show you the stocks with the best relative strength. So we've done a lot of the work for you. What you have to do is review these lists. You're going to come up with some of the best ideas in that current market environment.
Perfect. MarketSmith saves you time and makes investment research that much easier. For more information, go to investors.com/podcast2020.
Scott St. Clair is our guest on Investing with IBD, sponsored by MarketSmith. Okay, Scott, let's go into the topic of why some stocks will surprise you. Walk through that, because I think this is a really, really important topic. And yeah, so go into that kind of phrase, why some of these stocks will surprise you. And it's not just you, it surprises me, it surprises a lot of people, because they go a lot further than anyone can imagine. Maybe I answered it for you.
So I was rereading Market Wizards. It's one of my favorites. And Bruce Kovner said, and I really love this quote. He asked him why, what makes him a good trader. And he said two things. I have the ability to imagine configurations of the world different from today and really believe it can happen. And so sometimes I'll see a good stock, a good setup, and think, oh, well, that looks good, and buy it. But a lot of times I leave a lot of meat on the bone, so to speak, because I can't imagine that NEO can go from 20 to 60, or XYZ can go from 50 to 250, right? So you have to really have a vivid imagination or vision of some of these stocks. And I really love that quote. I don't remember who said it. I couldn't find the quote, but it's been, you have to have the courage to take the trade. I have no problem with that. I take every trade I see. Take too many of them, to be honest with you, but I don't have a problem with that. Patience to stay with the trade, that's something you have to have. But he also said you have to have the vision to see where it can go. And then lastly, you have to execution. Execution is key. You have to execute that process. So you have to take the trade, you have to sit with the trade, and then if it's going your way, you have to have vision to imagine a really big move. They're not all going to give you that big move, but if 1 in 10, 1 in 15, 1 in 20 even make the kind of moves that some of these stocks make, they really move the needle on your account. I just look at stocks that I've been in just in the last number of years, like Square or PayPal, or even the newer ones, such as Neo or Palantir. It's just brand new IPO, and I think it's up 20 from 10 to 22. So that's the thing I'm trying to work on, is imagine a big move. And one thing I think can help, and I've been doing a lot, is just anytime I have this urge to sell, I just absolutely refuse to get out completely if it's a winning trade. So I had a stock that was really moving recently, had a few thousands of shares, and when it was just killing me, I really wanted to sell. I just would go sell 100 shares, and 100 in all my accounts. I'd just sell 100 shares, and it seems so trivial. And it really is trivial if the stock were to just come all the way back. I'm not trying to, but it just kind of relieves that pressure on myself to be right, because I know that if I don't do that, I'm gonna mess it up. If I don't sell that 100, I might an hour later or the next day, I might sell 2,000, so I'd rather just give 100, give 100, give 100. And gosh, before I knew it, I don't think I've ever held in my career a stock for a double, because I've always gotten out and then got back in, get completely out, get back in, usually higher.
Yep.
And somehow I just was able to hold a core position for this. And before I knew it, it was a double, which was amazing to me. It's like, oh my gosh, that works. That courage to take the trade, the patience to stay with it, the vision to see. I actually think it's going a lot higher, a million moons higher. But normally I would just have taken 20, 25%, right? And so, and then execution, which was key. So these are things you have to write these things down, because we're human, and and that's why Bill was big on having rules. And a lot of times I'll come in and I have it written down. Okay. I can get out of XYZ here if I'm wrong, or here if I'm right. And then everywhere else in between is just noise. And so, but if you don't write it down, you kind of trade, seat of your pants. And I've lived that. And so then you'll be subject to these whipsaws and leaving a lot on the table on some of these great names.
Yeah, I think the partial selling, partial buying, but especially the partial selling is a big breakthrough. That was definitely a big breakthrough for me, because it enabled me to stay into some of these stocks. Even if you initially, when you buy it and you get hit on it, a lot of times I'll sell in thirds, and I might sell 2/3, but I'll let the last third really take me out. And there have been a number of times where it doesn't take me out, and then it starts coming back, right? So that part. But yeah, I'm with you on the upside. Some of these stocks, I'll just try to sell them a lot slower, like you. Now there have been like a Peloton. The Peloton is one of these ones that went on this huge run, and I was lucky enough to have that. And I just kept selling until the point where I had a pretty small position in it, but and then I just finally recently got out of it. But still, just going through that exercise of getting that double or whatever. And this has definitely been one of those markets where there have been plenty of doubles and triples and stuff like that in the market. So it has been a very unusual market, but you have to have some kind of consistent approach so you can take advantage of these type of markets too. And so, speaking of markets and just kind of larger trends and a really strong uptrending markets, I think since it's Thanksgiving, Scott, it's probably a good idea to go over the turkey story You want to share that with us?
From Reminiscences of a Stock Operator.
Is there another turkey story?
Is there another kind? Yeah. So I'm sure 90% of the people know this story, but if not, you have to read Reminiscences of a Stock Operator. It's I love Bill's book, but Reminiscences is such a great read, and it's timeless. It was written,
Yeah.
God, 125 years ago, and it still reads good today. I listen to
So
it a
great.
lot. So, but it's the story of the guy who he had been given a tip in Climax Motors, and it had gone up, right? And the other guy came over and said, I would sell it. It's due for a reaction.
Yeah.
And and he says, "Oh, my dear boy, I can't sell that stock. I'll lose my position." And if you've been
Old
through
man Partridge.
if you've been through as many bull cycles and bear cycles as me, that's one thing that somebody can't do is lose their position, right? And he didn't want to get out, and so he just stayed with it because it was a bull market, and that was his famous quote from the book. It's a bull market,
Yeah.
And so sometimes it's that easy, or it's a bull market, so stay with the stocks until it isn't. And that was one of the lessons that Jesse Livermore learned, is because he had learned it in the kind of the day trading time, the bucket shops of the day, where he'd put a bet down and it would move and he'd get out. And so when he went to Wall Street to try to do that, he found that wasn't working so well. He was not able to capture the moves. So the moral of the story is just if it's a bull market, you stay with it, and you wait for the signal to get out. Now, I've learned that because I like to have a really large position when the stock is moving. So remember, we're concentrated in stocks,
Right.
which is why we use a stop loss, because if you have 10, 15, 20% of your money in a single stock, you better have an exit plan. So I've just found it's just really hard for me to stay with it when there's that much of a position. But what I would do is just get rid of the whole thing, and that just didn't make sense to me. I just got tired of doing that and watching them go higher. And in this day and age with zero commission, and I'm and I know the whole tax thing people will talk about, but I've paid tremendous tax bills in the late 90s and 2000s. I would love to have that problem again. So the Uncle Sam is just a partner. I don't know any other way around it. I do have, we're kind of going off a beaten path, but if you're worried about it, have an IRA, have a Roth IRA. I think the Roth IRA is the greatest thing invented since the wheel.
I agree.
The money you put in is taxed, but anything you make after is not. It's just the Roth IRA is, I love that. I love the Roth IRA. So anyways, but the way I've combated that is just to maybe take a little bit off to fight that urge to reduce it.
Yeah, and so I clearly remember when I read Reminiscences of a Stock Operator the first time. I think it was like in 2003, 2002, and and one of the famous quotes from that book was, "It was the sitting, not the thinking," right?
Mm-hmm.
That did all the work for me. And it's so true. And I remember reading about there. I was like, I should use that now, but in practice, it's so hard to do unless you maybe write it down or have some rules or don't watch the market as much or
Yeah.
have a smaller position. That is, I mean, our system is in many ways a blessing and a curse, because you're trying to get 20% positions in some of these stocks, and when you're in a great market, you can put a lot of points on the board very, very quickly, but you can lose a lot of points very quickly too, or give back a lot of profits very fast. And I've always felt that there is some kind of in between kind of medium.
Yeah.
That there's a little bit better sweet spot that might be a little bit smaller positions that will enable me to ride some of these stocks longer. And I've worked on that over the years, and I feel like this year has been one of those years where I've had better chance to practice it. And so some stocks I've held for quite a long time, much longer than I've ever held. But there were times where I had it built up to like a 20% position, 25%, and then when the market's coming in, I reduced it all the way down to 3 to 5% position. But I didn't completely lose it. And there are a couple of important things here. First, it was that I learned for myself was first, uh, you can hold on to a small percentage. That's okay. A lot of times I would just say, what's the point of having a 3% position? Let me just get rid of it. But what I found is even just having a 3% position, when the stock started to turn, I was much quicker to get into it again. Versus if I'm completely out of it and now I see the stock turning, a lot of times I'll have that kind of a voice in my head. It's like, oh, just wait another day. Let's see if it works better. Wait another day. And all of a sudden, then it just jumps up, gaps up so much. Now I have the other kind of conversation where it's like, I'll jump up too far. I'll wait for the pullback. Right? And then it just takes off. Right. So, but when I have that smaller position, it starts moving. I can move it from a 3 to 5 to 10% position pretty quickly. Versus it's very hard if it's a 0% position for me to get back into that unless it does a traditional kind of breakout or something.
Sure, it's much easier to buy something you already own. I
Yes.
agree. And when we talk about like position size, in normal Wall Street, 3% is a monster position.
It is, yeah, right.
If
Which is
Fidelity
funny.
Contra had a 3% position in the stock I was in, I would love it. I'd be, wow, he's really making a big bet. So you have to remember, the way we do it is a little bit different. So we have different rules to be accordingly. And that is one thing that made Bill so great, is the fact that he could not only take a big position, I can do that, but he could ride a big position.
Yeah,
That's
that's
where
the
I
difference.
really struggle. And so then, but I have also decided that I'm not Bill O'Neill, and I can't be, I have to be my best me. And so sometimes you create these rules that are based on your own personality to combat, your weaknesses.
Yeah, no, and it is. I mean, I think that's another big lesson for just going through the system and stuff like that and doing it for a number of years. You have to make it your own. You really do. And it's just so funny. And Scott, I know you see this, but and we were both from the outside, we were customers, and then you come inside. And now we're working with a lot of people have been studying the CANSUM system for 20, 30 years. Everyone trades differently because everyone learned the concepts and they just made it their own. And so Scott's in completely different stocks than I'm in. We'll have overlap maybe sometimes, but not all the time. But it's really funny how everyone's in completely different stocks. You see it on IBD Live. A lot of people are in completely different stocks.
Remember, my favorite story with you is what early on I was in FireEye. Remember FireEye was
Yes.
was
Well,
running.
you nailed FireEye.
Yeah, it was running. It was like an
Yeah.
IPO base, and the stock was on fire. And one of the friends in the office was telling me, this is they're going to change the world in cyber security, right? And so I actually had the vision, the imagination. Boy, this stock's going to go a long way. And I don't remember how it came up, because one thing is we don't talk about stocks. Like I would never in a million years tell Arusha I'm buying XYZ.
Right.
It's just a superstitious thing.
But isn't that funny though, Scott? Because like when I thought from the outside, I was like, oh, if I ever worked at IBD, it's like it must be so cool. Everyone's probably sitting around a round table and saying, hey, let's all go and buy FireEye, or let's go and buy Apple together. It's breaking out. Let's all go for it. It's completely the opposite way.
No, I don't want to influence him, and I don't want it. I don't want to marry it too. So one thing about going on IBD Live, when I talk about stocks I'm in, I worry a little bit that, like I'm married to it. In other words, I can't get out. I told those people on IBD Live I liked XYZ yesterday, and those guys that go on TV and give ideas all day long, that must be awful, because I don't know how you could trade freely doing that. But anyways, at least this time you went off the rails versus me. But
oh, did I go? Oh.
Yeah, the FireEye story, where I was going with this, you talk about this being in different stocks, is the funny at the time FireEye. You remember what the EPS rating was?
It was a 1.
Yeah, of course. Yeah, it was 1. and you said, how can you be in that? It's a 1. I said, because that can only go up.
You can't disappoint anymore.
If it goes to 2, the EPS rating would double.
Yes. Yeah, and you know, that really did kind of surprise me and kind
that
of
was
opened my mind.
your shock. The look on your face was like the EPS rating's 1, and for me it was like I don't even know if I realized it. I just like, gosh, this stock really moves.
It was moving, yeah.
Yeah, I want to be in it, and so. But so when you told me it was the 1, I looked at it, I thought, oh, he's right. What am I going to say about that? I thought, well, it can't get any worse. There's nothing but smooth sailing higher from 1 to 2 to 10 to 12.
Right.
Alice.
Exactly. But it did open my mind and made me realize that there are a lot of stocks out there that are going to move before the earnings come, when they're going to move more on the potential. And so a lot of times people ask me, because we'll bring up a bunch of stocks. Come on, look at all the cloud stocks. They didn't necessarily have any earnings. They had great sales.
Yeah.
So if they have really strong sales, if they have a strong story, and then they have the price and volume action, I'll take a shot at it. If I like the story, especially. I mean, they have this really great story that I like. I'll take a shot at it and see what happens. Now, one thing about with IBD Live, and we're giving a nice little infomercial there. We're like product placement, Dave.
Yeah.
But IBD Live, but one stock that I really kind of discovered because of IBD Live was Corsair, right? Ticker symbol CRSR. And they brought it up on IBD Live when I was on it, and I looked at those earnings and sales. I was like, oh my God, I haven't seen too many IPOs do that. And so I think I bought it around 20 or something. While I was on the show, I was I'm just going to buy some here and get on the radar. I don't have like a big position or anything on it, but I still have some of this. And you want to talk about imagination?
That's
like
right,
I had no
exactly.
idea, right?
Perfect.
Which was the topic,
for it.
which was supposed to be the topic of the
Yeah.
second segment, Scott. But yeah, here's imagine. So this is something where it's like, I sold some. I took like half off around 40, 35, 40. Now I feel like an idiot taking that off. But what can you do, right?
Yeah.
In the beginning, when I was starting off, I'd be like, dwelling on it. Like, oh, how could I leave so much money on the table and stuff like that. But some of these stocks,
I don't know where I sold that stock. See, I didn't have. I just in the same thing. It's like they make gaming equipment, and that's why I bought it.
Yeah.
And I remember exactly where you bought it because it was on IBD Live, and
Yeah.
I was buying when I heard the story. And my son absolutely loves gaming. He's 9, and when I was 9, I was playing basketball and football and baseball, and he does a little bit of that, but he loves gaming, and his friends love gaming.
Not the only one, yeah.
And that was what I was like, perfect, let's go buy the stock. But then I didn't have that imagination, that vision that maybe it can make a big move. And you don't have to, it's not like you put your flag in the ground and say, well, I think this is going to go to the moon, and then you just ignore the price action. But when you have the imagination that it could double or triple, and the stock is doing just that, it's heading that way, then that helps you to stay with it. I think, at least that's what I'm trying to practice.
Yeah, and it also goes to the point that when I was starting off for years, I would say, oh, let's just wait a little bit, wait a little bit. This time it was, I'm gonna buy some. I was like, I like the idea. I recognize the name because I've seen it in the stores.
Oh wow!
And because I saw like these really expensive keyboards and headsets, and like they have a whole display at Best Buy, and so I saw that stuff. I was like, so that, and I like expensive things. I'm not gonna buy them. But when I see expensive things and I know that they're traded, there are other people who are buying them, and I'll just buy the stock.
It's kind of like the iPhone or the AirPods.
Exactly. Yeah.
I had a hard time pulling the trigger on the AirPods because they're so expensive.
I know.
But everybody kept telling me how great they were, and so I couldn't even buy them. My wife bought them for me for Father's Day, I think.
Okay.
Just couldn't bring myself to pay for it. Now I love them. They're amazing. So you're right. You get what you pay for in life pretty much, and in the stock market.
Yeah, or Coach was always an example that from 10, 15 years ago that stuck out to me. That went on this monster run. I was like, wow, those are expensive handbags. Or Lululemon, who would buy $100 yoga pants. I remember thinking about that like in 2010, and apparently a lot of people, right? So that's kind of been branded in my head. But so Corsair's one that's gone up on a big run. Peloton was another one that I mentioned before. Scott mentioned this. That's gone on a big run. Scott, you mentioned like what SolarEdge, right? What
Yeah.
was one that's gone on a much. I'll switch to the weekly charts a little bit less choppy, but it's gone on a much further than anyone can imagine, right? So some of these stocks, I mean, the one thing about the system, and then we'll take a break, is that the CANSOM system, our growth strategy, does an incredible job of identifying companies with tremendous potential. They're not always going to go up. Their stocks are going to go up and make it easy. Now that we've been in a crazy environment right now, but these are truly a lot of these companies that come through. They're going to be a handful of them. They're going to be around for a while, and they're going to be changing a lot of things. And so you want to take the time to know some of those stories and keep it on the radar, because when they do set up again, you can take another shot at it. So let's take a break here. When we come back, we'll go over a few ideas that are coming up on the radar right now. So stay tuned.
MarketSmith will give you a huge edge in the stock market. Better stocks, bigger profits.
MarketSmith is the top research platform for IBD.
It's just the best tool for individual stock selection.
Everything within MarketSmith is designed to bring those best stocks to the surface.
It does a lot of the work for you of filtering down to the potential leaders.
It's when you take the training wheels off and you're ready to invest on a more professional level.
MarketSmith will help you take control of your investment life.
If you want to get serious about investing, start your membership today.
We are back with Scott St. Clair on Investing with IBD, sponsored by MarketSmith. Okay, Scott, let's get into a few ideas here. And the first one is one that probably a lot of people are familiar with, Snow. And so talk to me about Snow, Scott. It's a good song by Informer, by the way.
Yeah, I missed your reference last time, remember?
I know, you did.
I think from institutional quality standpoint, this is the new name that every institution has to own, wants to own, needs to own.
Wow, look at that.
I don't know if you can look at if you can show everyone the related information panel.
Yeah, well, I'm showing it here. Because I've been like poo-pooing about Snow on IBD. I don't know if you caught, but I'm just like, okay, I don't, because I don't know that much about it. I didn't realize so many institutions are in it.
They are in Sideways and some of the best hedge funds owners. Bally Gifford is a great mutual fund company owners. So it's overvalued from all the metrics, right? I mean, the price to sales is to the moon. But one thing you'll learn is that the best stocks are always overvalued. Cisco went up 6 million% overvalued the whole way till it was finally undervalued, and then it went down, right? So that doesn't bother me at all, but the ownership just sticks out like a sore thumb to me. And I've tried the stock a couple of times and gotten stopped. I was in it for the move from 250 to 301. And then I was in it for the move from 301 down to 255 in one day. That was brutal. Yeah, the gap, that really bad. Yeah. So, but then I keep trying and I have on the IBD Live, I tongue in cheek, I said I have an irresponsibly large position in this one. So,
I mean, I got caught in this reversal here on September 30th. So I was up big on that day, and I stopped watching it. Then I gave it all back and found a way to lose money on it.
It's a very squirrely stock. It's hard to own. This morning it was up 7, and then it was down 5, and now it's up 7. Amazing. So you have to, kind of keep that in mind if you're going to buy it. But I don't know. It's my spidey senses with this stock tells me this is going to the moon. The institutions absolutely want to own it. And so I've been buying it for every day for the last 9 days. As soon as it went blue that one day, I just buy. And
was that the day that I said that this is probabably where you should buy it?
We talked about it. Yeah, it's funny because you said something about that, and I had been buying it that day.
That's because I said it, and that was on November 16th. I said this is actually probably where I said forget the breakout. This is where you should buy it if you really want Snow, because you're at the danger point, right? You're at the bottom of hopefully what is a handle. Of course, I didn't buy it because I didn't really know enough, or I didn't really take too strong a look at too good a look at the ownership. But yeah, well done. I mean, that was the perfect place to buy it.
Yeah, and if you're wrong, you lose 6% or 5% or whatever your stop
Right.
is. So, but I've tried a number of times, and so just kept trying and trying. You have earnings in what, 5 days or something like that. So that's the wild card as we sit here. Earnings. But I don't know. There's something about the revenue numbers are really huge, and I guess it's the new metric, net retention revenue or something.
Yeah, that's
And
a very important
their
for software
numbers,
companies. Yep.
yes, their net retention revenue
It's over 100% or something.
is bar none better than all the other guys out there. So it's about that imagination, vision, the courage to take the trade, done that, the patience to stay with it. So far, so good. I imagine this stock a lot higher. And now it's about execution. So it's execution both ways, because if it goes bad on me, I'm going to have to, execute the stop loss fairly fast. I kind of waited that one day that got hit really hard. I honestly waited too long. I should have got out a lot sooner. I let it get away from me a little bit, because I really wanted to try to hold on to it.
Mhm.
So that's, one that I have a large position in. I'm going to try to hold on to it. Let's see.
No, so that's Snowflake, and yeah, definitely worth taking a look. Look at the story and consider adding to the watch list. I mean, it's forming a cup with handle here, and so it's kind of going through that process. So it hasn't really officially broken out even yet. So.
Yeah, and who knows if it will. I'm like, I'm stubborn. I don't want to wait for 301.
No, where you got it, because and that is something that we don't. It's I wouldn't recommend until you've been trading probably for at least 10 years or so, because you've really proven that you can survive bad decisions or bad markets, and you'll cut your losses without question. But when I brought that up in IBD Live, and when Scott was actually buying it on that day, that to me, the reason why it seemed appealing to me is because it's already shaken out everyone, me included.
Mhm.
But there was a clear kind of place where you could define your risk. And in the end, I think that's the biggest thing is there a place where you can define risk, and are you and there's that concept of buying near the danger point too, which I think Jesse Livermore speaks about in one of his books. You want to try to buy it near the danger point, or you could buy it at a point or out of a cup with handle, where as it's breaking on a cup with handle, that's where it definitely should work immediately. And that's for many ways that's usually the approach I use. But
yeah, so I apologize. Maybe we're gonna run on this podcast. But
yeah,
what you
I
said,
was just a major run on
yeah,
sentence right there.
what you said triggered something in my thought process. I think is very important. Is I've tried. This is the third time I've tried snow, so I've lost twice in it, and I had a pretty good profit in the second time. From 250 to 301.
Yeah,
So, but there's besides baseball, I can't think of any other profession where you can be wrong so often and still do okay.
it's true.
You could never do this as a truck driver if you had 37 tickets in a year. That you'd lose your job, right? Or a surgeon, how many? If you replace the wrong hip 3 times, you're in trouble,
Yeah.
right? So every profession out there, you just couldn't. It's just the strangest thing, investing. It's so backwards, So, but you have to be resilient and persistent. And I just something about the story and the institutional sponsorship resonates with me, and I'm just going to keep trying until either something changes or I get it right. And Paul Tudor Jones tells a great story about there was an article in Wall Street Journal about how he had bought the bond market at the low and made a huge move on a rally. And he said, well, that story doesn't really tell totally true, because they don't talk about the 6 other times I tried to buy it and didn't work.
Yeah.
And I kept losing and losing until I finally got it right. Right.
Yeah.
So
yeah.
that's kind of that process. I'm okay with that. A lot of people aren't. It's very difficult psychologically to be wrong a lot. And in this business, in investing, it's one of the things that you have to fight, I think.
Yeah, no, I mean it. That psychologically for sure. You are That was one of the hardest things for me. Now, I think another key part of it though is if you're going to be right 3 or 4 times out of 10 in the markets, which you can do very, very well with that type of ratio. When you're right, you need to make sure the reward is heavily in your favor to overcome those losses, right? Or the math just won't work for you at that point. So you need, I mean, usually we're looking for three to one type of, so three times the reward for every risk you're taking. So that means that you could be wrong 3 times and right once, and you're still about even at that point. But that's one of the keys. I think one of the big mistakes that, and especially I know I've done this many times, is sometimes it's you sometimes take the profits too quickly because you've been wrong so much too, and then
Yeah.
it really is that one that you've given up that goes on that big run because you didn't let your winners run and you didn't have that imagination.
Yeah, it's in baseball is a perfect analogy. I always talk about Mike Trout, who's the best baseball player, arguably in the world. And how often is he right versus wrong, right? So he
Yeah.
gets on base roughly 40% of the time, be his batting average, walks, etc., which means he goes to the dugout 60% of the time wrong.
Yeah.
And he's going to the Baseball Hall of Fame and has a $500 million contract, right? And that's the same if in investing, because you know why? Because when he's right, sometimes he's right big.
Yep.
He hits a home run, a double, a triple. And so that's the same thing with investing. You don't have to be right all that often. In fact, I think the people that are right, I think win-loss ratio is way overrated, because I can be right a lot. I could buy XYZ at 30 and sell it very quickly at 30.10. That was right, but I didn't make any money doing that. So it's not about being right, like Bill would say. You want to when you're right, make big money.
Perfect. Let's go to another stock here, and this is CF Industries, ticker symbol CF, and this is a little bit unusual. It's not your traditional growth type of stock, but these stocks, when they're in favor, when the commodities are in favor, they can all trend pretty well. I just pulled it up on a weekly chart. Scott, what do you like about these guys?
So it's the same thing that we talked about a little bit earlier when I mentioned the rotation. So if the rotation is real, where's the money going to go? It's going to go into the places that underperformed. And if you've traded as long as I have, you've been in CF before. It was a monster, great stock. When Mosaic was moving,
Yeah,
CF
it was like 2007 or something.
Yeah, it can really move. So when I saw it moving, my instinct, I gravitated back to that stock back then, and I just bought it. I didn't even think about it too much. So it's the turnaround story. It's not perfect can slim, but like Bill would say in his book, 1 in 4 big winners are turnarounds. So, and another thing I like about this is it's so different from from a portfolio construction. So I have this unusually large position in Snow, which is tech and SaaS, and it's all the buzzwords, and so it's going to really move my account around a lot. And this one is totally different, right? It's not like I'm buying Twilio or ServiceNow or something like that. So I like that balance in a name like this.
CF is extended, but keep an eye on it. It's never a bad idea to have some other types of stocks or in different industry groups, drastically different industry groups, because it can add a little bit less volatility to your overall portfolio. Let's go to a third stock, and this is a newer company, Academy Sports and Outdoor, ticker symbol ASO. And Scott, what do you like about these guys? I mean, they have some those earnings and sales are really sticking out to me.
I know I had to do a double take when I saw that quarterly earnings report.
That last one is $1.97. What is going on here?
I don't know what happened there.
Are they investing in Bitcoin?
Maybe, maybe they're taking Bitcoin for, you buy shoes for Bitcoin, and Bitcoin's doubled since they've done that.
That's impressive. Wow.
There are no Academy of Sports in my neighborhood. I actually went on the web and did a zip code search, and it said there aren't any within 250 miles of me. Yeah. A friend of mine who lives in the southeast and told me about this company and said, it's, because it's new and IPO, and he said it's the really kind of the hot retail in that area. So
Well, I like it that it's not here.
yeah,
Yeah,
because it means they can come here, right?
Yes, exactly. Yeah.
And it appeals to me from the retail side because, this is like the old Bill O'Neill story. A lot of his big winners were in retail because he could go and, count the cars in the parking lot, where they have drones that do that now, and the hedge funds pay for that stuff. Bill should have started that service. But you can kind of imagine, like he would he say with Price Club, he'd say, wow, they have 30 stores. I could imagine they'd have, why can't they have 300, in Home Depot with 12 stores in Florida and Georgia. Why can't they have one within, incredible. There's a Home Depot probably within every 10 miles where I live. So it's new. I don't know much about it because I couldn't visit it, but the new is very appealing to me, and that last quarter earnings kind of sticks out.
Yeah, no, it is. It is interesting to me. I'm wondering if it's a retail store, but if they also have like sports training and stuff like that, because then that it's like almost, because when I see that Academy Sports and outdoor kind of stuff, but
That's
maybe
what
it's
I
just a
thought it
retail
was
store
when he
too.
mentioned it to me. 'Cause
Yeah,
here and where we live, Academy means you pay $300 a month to
yeah,
have
you
somebody
don't-
train your daughter in
exactly.
soccer, right?
Right. So yeah, so that's Academy Sports and Outdoor, worth looking into. I mean, this is kind of like what stuck out to me with Corsair. It was a new IPO with, and like this one, this has some big earnings and sales, and you don't see too many IPOs that come out that have that. Now, another one that it's kind of reminds me of is, and I don't want anyone to imagine too much, but Ollie Bargain Outlet, right? And ticker symbol OLLI. I'm pretty sure when they came out, they had some pretty good earnings and sales. But one thing that David Ryan mentioned, who was a former portfolio manager here, he's in the Market Wizards book. Scott mentioned that earlier in the episode. With Ali, the thing that's really stuck out to him, because David did really well in this stock a few years ago. He said that one of his favorite things that he learned about the company is that they were around for like 30 years, and they never lost a store. Well, like every store is profitable and stuff like that. They never had to shut down any of their stores. And so that 30-year track record. So I'm wondering about with Academy Sports and Outdoor, how long have these guys been around? If they've been around for a long time, and now they're also putting some earnings and sales, it's something definitely worth considering and adding to the watch list. Okay, so let's go to one more.
So this is in honor of FireEye. I thought I would pick. So funny that this worked out this way. I said I have to have an EPS rated stock of 1 in honor of FireEye. So Risha could say, yeah, but it has an EPS rating of 1. So, very speculative, newer company. And a lot of these times, what happens a lot on the weekends when you're doing the work, when you're just looking at lots of stocks, a lot of these names just come up on your radar. And it doesn't mean you have to go buy them or whatever, but at least you kind of have like an idea about them just in case, right? So it's, they do, I can't say the word, so I'm going to use the word mushrooms, the psilocybin. Is that how you pronounce it? You were a biology major,
yeah, but yeah, I'm no longer a bio major, so
so they're using.
Yeah, I think that looks right. I think you did pronounce it right.
Yeah.
So it's hallucinogenics that they're using to treat depression.
And the stock is, so it goes public at 17 and runs to 47. Okay, so there's step 1 for me. Who did that? Who moved that stock?
Yeah.
So that's a big move. So then I start to look more into it. Peter Thiel is helped to fund this company.
Wow.
What are some of the other companies Peter Thiel funded? Well, that company, Facebook, was one of them. So, a guy like that, can he be wrong? Sure. But, I want to, it's kind of like why I look at the mutual funds. Can Will Danoff be wrong, the manager of Contra? Sure. But I want to bet with the guys that have track records. And so Peter Thiel is an investor, helped start the company. I don't know if you saw it, but on 60 Minutes, they did a special on not this company, but on this whole movement where, people who have cancer, especially terminal cancer, I can only imagine how that, I can't imagine the news of that, how devastating that must be for them and their families. But they're treating these people with these mushrooms and allowing them to just kind of let go. And it was an amazing story. I saw it on 60
Wow.
Minutes. So that combination, and so I was like,
Didn't
wow,
Oregon vote
yeah, and
in
Oregon
too?
passed a law that you can use these now in the most recent voting. So these are little things that just, kind of come across my desk, and the stock is acting, fine. And again, it's that imagination vision thing. The market for antidepressants, I just looked it up, is, almost 15 billion. And antidepressants have a lot of side effects, a lot of problems. If this works, I can imagine this stock going a lot higher. And so that's kind of the thought process why I wanted to introduce, a name like this, which is normally, not going to be on my radar. There's no earnings, there's no sales. And so a lot of times I've never participated in these kind of, I can't think of the word, but these biotechs that that just go up 200-300%. It's like, wow, because of that.
Right.
I can't know the drug, I can't understand any of that, but this makes sense to me.
So there are a few ideas that are worth considering. So Scott, thanks so much for joining us again today.
It was fun, always. A lot of people will email us to say, "Looks like you two are having fun," and we
We're
are.
good actors.
It's real. No, it's real.
Maybe for you.
All right.
Next week we are gonna have Leaf Soriad on the show. Leaf won the U.S. Investing Championship last
I
year.
follow him on Twitter. That's cool. All right, good one.
Yeah, and his wife just had a baby, so maybe we'll have him on. But
he has 4 kids, I think.
I know it's 4. Yeah.
Well.
So we'll see. We'll see if we can have him on. But if not, we'll maybe we'll have Scott St. Clair.
Can you have me back? Yeah.
Exactly.
I think I have the record now.
Because Mike lost it. Because Mike.
Yeah, I think I just passed
this.
Mike, like the tortoise and the hare. You
should send him an.
I'm gonna send him this in a tweet. Hey, Mike, you might want to watch this show. I think this is my 4th.
Well, this show hasn't officially ended yet, because you won't be quiet. So.
It hasn't been published yet, huh? If I keep going.
Yeah, it's true. I know we can't cut you then. So that's it for this week on Investing with IBD. I'm Rusha Ferris, and thanks for listening.
And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.